Hey there, welcome back to my channel, it's me the Mind Injector. Today, we're diving deep into the world of Fintech and exploring SoFi Technologies, a company that has been on a rollercoaster ride. Their stock is down 74% from its peak and has dropped 32% just this year. But before you dismiss it, let's dig in to see if there's a silver lining and whether SoFi could potentially make you a millionaire someday. Despite ongoing economic headwinds, SoFi's growth has been impressive. In the first quarter of 2024, the company saw a 37% year-over-year revenue increase. Compared to the first quarter of 2021, revenue has surged by a staggering 229%. The customer base is expanding rapidly, and SoFi's strategy involves not only acquiring new customers, but also cross-selling more services to them, driving long-term revenue potential. Since its founding in 2011, SoFi's primary goal has been expansion. This is a typical strategy for younger companies aiming for greater adoption. Financial soundness wasn't a top concern initially, but SoFi has now reported 2 consecutive quarters of profitability according to GAAP. This milestone demonstrates that the company's business model is sustainable. In the first quarter, SoFi posted diluted earnings per share of 2 cents. Looking ahead, management predicts diluted EPS will range between 55 cents and 80 cents by 2026. If SoFi can continue leveraging its product development and marketing expenses while increasing revenue, these targets seem achievable. Fintech is no longer just a trend, it's becoming the standard for finance. Major companies are investing heavily in financial technology, and SoFi, as an early all-digital bank, stands to benefit significantly. Despite its achievements, SoFi's stock often faces skepticism, largely due to its transition from online lending to full-fledged banking and persistent short-selling pressure. SoFi's business model offers distinct advantages. Its internet-only approach helps reduce customer acquisition costs. The company provides a broad range of financial products, which ensures high customer retention. By avoiding the overhead costs associated with physical branches, SoFi can offer competitive rates. In the fintech world, SoFi stands out by focusing its investments on creating top-tier digital experiences. The company targets young professionals and students who are typically more tech-savvy, attracting high-quality customers. Most deposits in SoFi Money accounts come from direct deposits, indicating a robust revenue stream from employed members. SoFi's technology platform segment, which includes banking as a service, is a significant growth driver. With acquisitions like Galileo and Technisys, SoFi provides back-end banking infrastructure for other fintech players. This segment's revenue grew 21% in the first quarter to $94 million, with contribution profit doubling to $30 million. SoFi aims to become the GOAT of fintech, projecting 20% revenue growth in 2024, a metric that, if achieved, suggests the market might be underestimating SoFi stock at current levels. However, let's not ignore the bearish view. Despite doubling in 2023, SoFi's stock has dropped around 30% this year due to concerns about its slowing lending business growth. Even though the company had a strong quarter, investors are worried about declining lending revenue and EPS dilution from debt to stock conversion. There are also concerns about credit quality amid increasing consumer weaknesses. SoFi's personal loan portfolio stands at $15.6 billion. With a net charge-off ratio of 3.45% in the first quarter, up from 2.97% the previous year. Ongoing consumer weaknesses could impact SoFi's loan book and profitability. Interestingly, while lending remains a significant part of SoFi's business, it's becoming less crucial for overall growth. Lending segment revenue declined by 2% in the first quarter, and full-year revenue is expected to decline by 5% to 8%. Yet, SoFi has labeled this year as a transition period, signaling potential volatility. Conservative or short-term investors might want to steer clear, but for those with a long-term outlook, there are reasons to remain optimistic. Let's delve deeper into what makes SoFi stand out from traditional banks and other fintech companies. SoFi's digital-only model allows it to offer competitive interest rates and lower fees compared to traditional banks with physical branches. This cost advantage is a significant draw for customers looking for better financial services without the overhead costs. SoFi's focus on financial education and member benefits sets it apart. The company offers various tools and resources to help customers manage their finances, including budgeting tools, financial planning services, and access to financial advisors. These value-added services create a more comprehensive and engaging experience for customers, fostering loyalty and long-term relationships. SoFi's community-centric approach is another differentiator. The company hosts events, webinars, and networking opportunities for its members, creating a sense of community and support. This approach not only enhances customer satisfaction but also drives word-of-mouth referrals, further expanding SoFi's customer base. Before we get into the exciting details, let me introduce you to Moomoo Financial. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So, sign up now using the link in the description and get those free stocks. Now, let's get back to the video. In terms of innovation, SoFi is continuously expanding its product offerings to meet the evolving needs of its customers. For instance, the company's recent introduction of cryptocurrency trading and investment options reflects its commitment to staying at the forefront of financial innovation. By offering a wide range of financial products under one roof, SoFi aims to be a one-stop shop for all financial needs, simplifying the customer experience and decreasing cross-sell opportunities. SoFi's strategic partnerships and acquisitions play a crucial role in its growth strategy. The acquisition of Galileo and Technisys has strengthened SoFi's position in the fintech space, providing it with cutting-edge technology and infrastructure to support its operations. These acquisitions enable SoFi to offer banking as a service to other fintech companies, creating additional revenue streams and enhancing its competitive edge. Furthermore, SoFi's entry into the mortgage market has opened up new avenues for growth. The company's mortgage offerings cater to both first-time homebuyers and those looking to refinance, providing competitive rates and a streamlined digital experience. This diversification of revenue sources helps mitigate risks associated with reliance on a single product line and supports long-term growth. While SoFi Technologies has faced significant challenges and its stock has seen substantial declines, the underlying business remains strong and full of potential. The company's innovative approach, diverse product offerings, and strategic partnerships position it well for long-term growth. For investors with a long-term perspective, SoFi could be a worthwhile investment opportunity, potentially leading to significant returns in the future. This is it for this video, guys. Thanks for watching and please make sure to subscribe, like, and leave a comment down below.